Okay, you're very welcome. How bad can CRA fines get on an audit? Can it be like crippling? Yeah, yeah. Okay, so here's the way an audit works. Hi, thank you. I'm glad you're enjoying the presentation. The audit works is, or they call it a review. They will ask for some details about the things that you have chosen to write off. And where things get expensive is if they decide to disallow some of your expenses. In other words, that they don't agree that they're legitimate. And then it starts to cost money. Now, it's different cost of money depending on why, on what CRA, there's a subcategory here. There's disallowed because they think that you made a judgment call that they don't really agree with, right? And what that does is the expense, instead of being able to deduct it, it gets put back on your return, so that that income that you wrote off gets put back on your return. So if it's a $2,000 expense that has now been disallowed, your expenses are now dropping by $2,000, which means that your net profit is increasing by that $2,000. So you're going to pay the tax on the $2,000. So is that going to become crippling? It depends literally on the size of the deductions that they are disallowing. So if they disallow enough expenses, then the tax that is triggered by that can be crippling. So the amount of tax that is triggered is the same amount of tax that you would have paid on the income if you had not written off that expense. Most things are being taxed. Most things, if you're not in the sort of $150,000 and up income bracket, basically you can assume that you're being taxed about 30% on income. So when you have an expense, you're going to get back in tax about 30% of that, because your income is going to drop by that amount and the relief is 30% tax. If an expense gets removed, so now the income is coming back into your return, 30% that's tax. That's if they think that they don't agree that you should have written it off, but that it was basically a judgment call, they just don't think you should have made it. It's a correction. They've corrected your taxes. The tax bill is now what it would have been without the expense. The other kind of correction is where they think that you intentionally, willfully, knowingly were trying to cheat. And that is tax evasion. And with that, yeah, they put it back on. Yeah, you pay the tax, and then you pay the tax at least one more time. They double the tax. So let's say that you wrote off the $2,000, and they think not only should you not have written it off, you knew you shouldn't have written it off. You were cheating. You wrote off something that wasn't really a business expense. You wrote it off because you wanted to. Then they will put it back on your income. It'll trigger a tax bill, and they will double that tax bill. So it can be, again, it depends on both size and intention of the thing that they're disallowing in the audit. Assuming they disallow it. If you have fabulous records, if you keep fabulous records, and you can defend everything, and if you can successfully apply the principle of reasonable expectation of profit, you won't lose any of your expenses. I literally know somebody who got audited and basically came out exactly the same. They didn't charge her anything because she just defended herself perfectly. So that is also possible. I live in Quebec and received some income from an organization based outside of Quebec for which I received a T4A, but not a Quebec tax slip. Would this mean that this type of income is not taxable in Quebec, or that I have to add it manually to the provincial return? If it's relevant, it would fall under the category of scholarship/award. Yes, you must manually report it on your Quebec return. If you use software and it does a slip download, slips coming in directly from the Canada Revenue Agency, the T4A is there. It's going to get pulled into your return. And depending on the software, it should automatically show up on your Quebec return as well. So there, yeah, it's all taxable according to Quebec's rules. So whatever Quebec's rule is about this particular kind of income, which is probably that it's taxable, then it belongs in the Quebec return. Now, Quebec has their own rules about what's taxable and what's not taxable. They are a unique province, as we all know. They beat it over our heads with it all the time. They are very unique. And because of that, it is possible that they don't think that this award is taxable. I don't know if they have a special rule for this particular award. If they don't think it's taxable, then you don't have to report it. But most likely, they think it's taxable. Because one thing about Quebec, they are different from every other province, but they do love taxing you. So they just make you pay the proper tax with the disallowed expenses removed. They don't add crazy fines on top. As I say, if they believe, and typically this is what they conclude, if they believe that it was an honest mistake, they do not add a fine on top. It's not, you're not fined because you have a difference of opinion over what should have been deducted or whatever. If they believe that that your heart was in the right place, there's no fine on top, just the tax. But if they don't think your heart was in the right place, there's a fine on top of the tax. Do we file Quebec tax returns? Yeah, we do. Yes, we do. We have to charge extra because they're a pain and there's a whole extra step to it. We don't like to, but we do it. We'll do a return for anybody anywhere in the city, in the country rather. Very, very quick tax quiz. I'm not even going to give you a chance to answer this quiz question, which is, what special tax, see, this is when we're getting tired, imposed by Henry VIII, Elizabeth I, and Tsar Peter the Great, could only be levied against certain female circus performers and men? I will leave that up for a second while I answer this question. If my mom transfers me a bunch of funds for no reason, do I have to declare that on gross income? What's the cutoff amount? It's a gift. A gift is not taxable and it doesn't have to be reported anywhere. So if she just gives you money, she doesn't get to write it off or anything, so she doesn't get any tax break for it, but also you're not responsible for paying tax on top of it. Can you comment or explain on how to carry forward expenses to the next tax year? You kind of can't. Basically, expenses are expenses. They have to be expensed in the year. The things that you can carry forward really are capital cost allowance. So where you can choose not to make your deduction on your assets this year, and you can choose to have a greater amount to deduct next year. But expenses generally not really. You know, unless you can, yeah, not really. There's, yeah, not really. You can sometimes carry forward some income. If you have a 2-year grant and you get all the money in 1 year, you can use reserves to carry forward part of the grant into the next year, as long as the amount that you've carried forward is logical based on the work that you've done and not based on just what you want. You can carry forward the income, but the expenses kind of have to go in the year that you expended them. All right, the tax imposed on men and circus performers is, of course, if you haven't already guessed, the beard tax, where you have to pay a tax for having a beard, and you would get a little token that you could carry around to prove that you paid it. Filing deadlines. So deadlines are really super important to the government because paperwork is so important to them. And in general, making them wait for paperwork is a bigger deal than making them wait for money. You know, as people, as human beings, we obviously think money is the big deal. And ultimately, of course, it is all about money. But from the bureaucrat's point of view, the paperwork is the primary thing that they want, and the paper is, and the money is separate and lesser. And we can tell this just by inferring it from their laws. So basically, if you file a piece of paperwork late, there's a penalty, like a fine. If you give them money late, there's interest. And so paper late, penalty. Money late, interest. And the penalties are way bigger than the interest. Okay. So like I said, filing a tax return 1 day late, you pay 5% of the tax. On top of the tax, you pay your tax and you owe an extra 5%, that's a penalty. The interest is nothing. The interest is 5% per year. So if you have the choice between filing 6 months late and paying right away, and paying at the time that you file, or you know, filing 1 day late, and if you have a choice between making them wait 6 months for the paperwork or making them wait 6 months for the money, if you make them wait 6 months for the paperwork, you're going to pay a fine of 10% of your tax bill. If you make them wait 6 months for the money, you're going to pay 2.5% of interest. So their own rules make it clear what they prioritize. Paperwork, 5% penalty for being 1 day late. It takes you have to be late a year paying them to manage to owe them that much. So definitely know what your deadlines are. Anytime that there's a deadline for getting information, paperwork, documents to the government, get it in on time. You're going to have, at the very least, headaches and possibly fines as well if you don't get them paperwork in time. Don't worry if you can't pay it right away. You can actually manage that more easily than getting them paperwork late. As for the deadline, everybody knows April 30th is the filing deadline, except as a self-employed person, you actually get an extension. Self-employed people and their spouses get an extra 6 weeks to file. This is true even if you have a job as well as self-employment. Any self-employment at all unlocks this June 15th filing deadline and also unlocks it for your partner, your husband, wife, spouse, common law partner. They also get an extra 6 weeks to file. After you filed, you have to keep these records, as I said, because CRA can come back to review things up to 7 years later. And so you really need to make sure that 7 years later, any questions they have about what you did and what you wrote in there can be defended. You have to be ready to defend. So to defend, you need paperwork. And what kind of paperwork? You're going to keep receipts, invoices, basically documents like that. I often get a lot of questions about whether you can just keep your credit card statements because it's a lot tidier. No, I mean, you can, but the CRA has a certain internal rule that says that they are not obliged to accept a credit card receipt as proof of an expenditure. They might if they're in that kind of mood, but they don't have to. So what you really want to do to cover your butt is register tapes, cash register tapes, email confirmations from the vendor, agreements for ongoing subscriptions, anything like that. One of the reasons that the credit card receipt doesn't function as a receipt is because it has to have a proper receipt, has the name and address and date of the purchase. So typically that is actually printed on a cash register receipt. If you've ever examined a cash register receipt, the address is always on there. And that is because that's what makes it valid. So do keep them. If all you have is a credit card receipt, I mean, it's better than nothing. This is better. These three things are better. Service agreements, if you have like a cell phone plan where they don't invoice you monthly, and instead they just take a bit of money off your credit card, then you might need the ongoing agreement to show what that was. If you don't have receipts, a good note, really, like a handwritten note by you, can suffice. For example, if you're trying to figure out how much you should have paid your spouse and you calculate it based on how many hours of work they did and what you would pay a stranger, and then you come to a number and that's how much you're writing off, that's how much you're paying them. That is just a note. There's no receipt or anything more official than that, but that note can help you defend yourself in an audit. I'm going to take a quick pause here to look at some questions here. Do we do Canada and US filing? Unfortunately, we do not. I'm working on getting a US tax specialist, on the roster, but I don't have one right now that I can recommend. I'm so sorry. We really should, and someday we really will, because it is very, very important to be able to, if you are a US person, you really need to file your US returns. Can you store receipts digitally? Yes, you can. I don't know. I mean, you can. Yeah, absolutely, you can. If you have like a receipt scanner, you can keep it as long as it's legible. Remember that thermal receipts, for example, fade. So even if you scan them, if you've waited too long and you scan one of those receipts that comes on the crinkly paper, it may be so faded that the scan is illegible. So try to scan them early, or if you can't, a little trick that you can use is use the photo setting on your scanner, and then you can actually, the photo setting can sort of pick up fainter gradations, and it can usually read a faded receipt better than the standard photocopier setting. But at the same time, it's like, why not just keep them? Just put them all in the shoebox, store the shoebox, put a date on it of when you can throw it out 7 years after you file a return, and keep the paper too. Why not? Physical receipts tend to disintegrate and die, and they are annoying. Digital records can also disintegrate and die. So, there's no winning, really. Anything is possible. What about scanned cash register receipts? I despise holding on to all that paper. Yeah, just like I said, stick a bunch of them down on a sheet of paper, photocopy them, make sure they're all legible, and you can probably throw away the paper. Go ahead, as long as the amount, the date, and the address are all visible on that receipt that you've scanned or photocopied, good enough. Okay, so car expenses. So we did explain that you're basically going to take, if you use your car for business purposes, and I do see that we're running out of time here, but I'm going to try to get to the end of the slides anyway. Car expenses, you're going to take the overall operating expense and take a percentage for business use. And how do you defend, because this is something that they also like to go after, how do you defend the percentage that you're using for business use? And the answer is you do it with a car log. Okay, that's actually a log car, and that shouldn't be there. Hold on, let's see. A car log, which is where you track the kilometers you put on the car for business versus the kilometers on the car overall. People used to do this on paper. You still can alternately. There are lots of phone apps right now that'll do that. So you're just going to turn it on as you head out on a in your car for a gig, and you turn it off when you come back home, and there you have a record of the kilometers that you spent. Make sure that you also take note of where the gig was and what it was, the date and what it was, so that if CRA says, well, what about this trip? Why are you calling that a business trip? You can actually refer to your notes and say it was a business trip because I was going, that was the day that I drove to, Sarnia for a recital, right? That you know the date and you know where you were going and you know why. I get a lot of questions as to what is the best system for maintaining your records. Do you just throw your receipts in a box? Do you use bookkeeping software? Do you use a spreadsheet where you keep it accurate to 3 decimal places? What do you do? Which of these is the best? Is it receipts or is a box of receipts best? Is a spreadsheet best? Is software best? And the answer is yes. Yes, they are all best. They depend on you. So it's choosing your record keeping system is like choosing your fitness system. It's not the most perfect system. It's the one that you can consistently do. Because incomplete records that are really precise but missing 8 months, useless. Whereas incorrect, like a little bit off records, but they're for the whole year, are useful because they're probably not too bad. It's a bit like, the joke is, that a stopped clock is better than a slow clock because at least a stopped clock is right twice a day. But the reality is, of course, we know that we'd rather, if we have a clock, we'd rather that it be a little bit slow than stopped, because a little bit slow will still give us information. And that is the equivalent of in a not perfectly accurate but consistent record keeping plan. So whichever thing that you think you can do, if all you can do is throw things in a shoebox, then do that. If you love spreadsheets, then do that. If you love bookkeeping software, do that. You don't need to use bookkeeping software if you prefer a box full of receipts. It'll be fine, I promise. Everything I'm talking about here is stuff that you can do. It's a burden to be self-employed and be trying to stay up to date with your taxes and be trying to be consistent. It is. But it is so much easier to stay out of trouble than to get out of trouble. And I know this from many sad stories that have come through my door over the years. If you do what I've asked you to do, keep your receipts, set aside money for tax, know your filing deadlines and obey them, you will stay out of almost any kind of tax trouble it's possible to get into. Okay, I call it good tax hygiene. And it's a lot like flossing. I hate flossing. It's annoying. It's boring. It's tedious. And sometimes I bleed. But the benefit is I don't lose a tooth. And anyone who's lost a tooth will tell you flossing is not as bad as losing a tooth. So do what you need to do. Be consistent with it. Don't fall behind or don't fall too far behind. And you should be okay. All right, and that's all I have for you. We're way over time now. I don't really think that I can answer any questions that you might have now. If you do have some questions, you can contact my office. We will do our best. It is tax season, so we are just crazy busy, but I try my best to dash off responses even in the season if there's something you need to know that I didn't cover and that isn't in the resources that I hope you'll all go ahead and download at your earliest opportunity. And I'll hand it back.
Sunny, thank you so much. I don't think there's ever enough time to cover all the nuances of what we were discussing today. So again, a big thank you for taking your Saturday to be with us. It was incredibly insightful, and I personally learned a lot. So yeah, thank you again, and thank you everyone for joining us today. And we wish you all the best. Bye now.
Thank you so much for having me.